Welcome back to Investing Talk Podcast. Keeping up with earnings reports can feel like a full-time job, right? Just this never-ending stream of numbers and projections.
It really can.
But understanding what really matters in those reports, well, that's key to navigating the market effectively. Today, we're taking a closer look at a giant in global logistics, FedEx.
The big one.
Their upcoming earnings report isn't just about their quarterly performance. It's kind of a fascinating litmus test, how a global titan adapts to, well, a world of volatile demand and pretty aggressive competition.
Exactly.
We're going to break down FedEx's upcoming earnings to watch and what it could truly mean for their future and maybe even the broader economic landscape. But before we jump in, if you find value in these discussions, please take a moment to subscribe, like, and maybe leave us a comment.
Yeah, that really helps us out.
It really does. Your support helps us immensely. And if you're feeling generous, maybe consider buying us a coffee.
Always appreciated.
And also, if there's a specific company you'd like us to look into for a future analysis, just leave a comment below after we're done here. We genuinely love hearing from you.
We do.
Okay, let's unpack this upcoming earnings report for FedEx then. We've gathered some really interesting insights to help you understand the landscape before their official announcement. The central question we're kind of wrestling with tonight is FedEx truly weathering the storm? Or are they maybe just, patching leaks?
That's the perfect framing, because we're not just sifting through numbers here. We're trying to get a feel for the pulse, really, of a major global logistics player in this constantly shifting environment.
Right.
We'll be walking through the market expectations, their past performance, and critically, the bigger picture that's influencing their results. What's fascinating here, I think, is that every earnings report for a company like FedEx, it offers a window into the global economy itself.
Absolutely. It really does.
Yeah.
So let's start with the immediate horizon. When can we actually expect this report? And what are the analysts predicting for FedEx?
Okay, so you should mark your calendars for September 18th, 2025.
September 18th, got it.
Yeah. FedEx is expected to report after market close on that day. Now, when we look at the analyst consensus, our sources like S&P, they're generally expecting revenue to be around $21.73 billion.
Okay, $21.73 billion.
For earnings per share, or EPS, there's actually a slight spread among the estimates, which is, always interesting to see.
Right, yeah.
Yeah, S&P data suggests around $3.55 per share, while Zacks consensus is a bit higher at $3.72.
Okay, so a bit of a gap there.
That $0.17 difference, it isn't just a rounding error, right? It likely reflects some maybe fundamental disagreements among analysts on how effectively FedEx is managing its international express segment versus, say, its domestic ground operations.
Interesting.
So it signals a key area of uncertainty for investors. Definitely keep that spread in mind.
That's a really good range to keep in mind, yeah. And that difference between S&P and Zacks certainly shows analysts aren't entirely in lockstep about FedEx's immediate future. Now, did FedEx offer any specific guidance for this current quarter? Or are we mostly, extrapolating from their past performance?
Not explicitly for this current quarter, no. Based on the official press releases we reviewed, they haven't given a precise forecast for this upcoming period.
Okay.
However, it's definitely worth remembering their performance back in Q4 FY25. They reported revenue of $22.220 billion and actually beat the EPS consensus.
Oh, right.
Yeah, they came in at $6.07 against an estimate of $5.98. That beat wasn't just marginal either. It kind of hinted at stronger than expected cost control, maybe in their ground operation.
Which is critical.
Absolutely critical, given fuel price fluctuations and labor costs. It gives us a little context for their recent execution and maybe their ability to exceed expectations when they really focus on what's within their control.
Okay, so their recent execution record gives us a pretty critical lens to view these upcoming figures through. Let's peel back the layers a bit on how consistently they've delivered or maybe stumbled in the past 4 quarters. How has FedEx performed in terms of surprises? Have they been hitting targets? Missing them?
Well, if we look at the recent history, it's shown a mixed but generally positive trend, which is, quite reassuring in such a volatile industry.
Okay, positive overall.
Yeah. So in Q4 FY25, like we just mentioned, they beat EPS expectations with that $6.07 against the estimated $5.98. That was a clear win, suggesting their cost management stuff was really taking hold.
Right.
Then in Q3 FY25, while a specific EPS figure wasn't highlighted in our sources, they did report strong revenue. $22.16 billion, beating the $21.88 billion estimate. So top-line strength there, indicating pretty resilient demand, perhaps in specific segments.
Good sign.
Then the quarter before that, Q2 FY25, that was a slight miss on revenue, came in at $21.97 billion against an estimate of $22.09 billion.
Wait, a slight miss. Why was that?
Well, this small dip on the revenue side was largely attributed to softer global trade volumes around the holiday season, apparently, not necessarily any internal missteps.
Gotcha. Macro factors.
Exactly. And then in Q1 FY25, their revenue was practically a bullseye, pretty much in line with expectations at $21.73 billion compared to an estimate of $21.74 billion. So that showed a period of, stabilization after some previous uncertainties.
Okay. So it sounds like they've mostly met or even exceeded expectations with just that one slight revenue miss in Q2. That paints a fairly consistent picture.
Mm-hmm.
But if revenue growth is kind of tempered, yet earnings are strong. What does this tell us about the overall trends in their business? Are they, sacrificing market share for profitability, or are they just operating a much leaner ship? What's the trade-off here for investors?
That's exactly the important question, right? And it goes right to the heart of our narrative. Are they weathering the storm? The key metric trends suggest pretty modest revenue growth, projected at about 0.7% year over year.
Okay, 0.7%. Not huge.
Not huge at all. So, while earnings have generally been strong, implying good cost management, revenue growth has been a bit more, tempered.
Well,
This isn't just about cutting costs, though. It feels like a strategic pivot for FedEx.
how so?
It likely indicates they're recognizing the limitations of purely chasing volume growth in what's become a saturated market. Instead, they appear to be carving out a niche, maybe as a high-margin mover.
Interesting term, high margin mover.
Yeah, it subtly shifts their competitive posture, right? Makes them maybe less vulnerable to pure price wars, which is kind of a surprising move for a logistics behemoth like them. They seem to be focusing on profitability per package rather than just package count,
Oh, okay.
which hints at a more sustainable, perhaps if slower, growth path.
That focus on efficiency,
Hmm.
even with just modest top-line growth, it really makes you wonder what external pressures might be shaping that strategy. It reminds me of that old saying, you can't control the wind, but you can adjust your sails.
That's a good one. Apt here.
So let's pivot then and look at the broader economic currents and maybe the company's specific winds they've been sailing through this past quarter. Beyond the numbers and the history, what significant news or broader trends might have specifically impacted FedEx's operations and ultimately their financial performance recently?
Well, while FedEx didn't exactly drop a bombshell announcement this quarter, we definitely saw sustained trends that silently but significantly affect their business.
Like what?
Well, consider the ongoing pressure from e-commerce giants like Amazon building out their own extensive logistics networks.
Right, that's huge.
It inevitably shifts some package volume away from traditional carriers like FedEx. Then there's the variable cost of fuel, always a wild card, and, increasing labor costs in key hubs. These quiet, persistent pressures are often more significant than a single news flash. They just chip away at margins or force strategic adjustments.
Mm-hmm. The slow burn.
Exactly. And if we connect this to the bigger picture, the whole express shipping and logistics sector, it continues to grapple with rate pressures and volume variability globally. It's just a very competitive market.
Yep.
And economic shifts directly impact shipping demand. I mean, did you know FedEx processes over 16 million packages a day globally?
Wow, 16 million. That's staggering.
It is. That's more than the population of Pennsylvania moving through their system every single day. That sheer scale is what makes these efficiency improvements so critical for them.
No kidding.
However, there is a backdrop of gradual global economic stabilization, which does offer some, tempered optimism for the sector as a whole. This broader trend could provide a gentle lift for FedEx, but it's still a very dynamic environment out there.
So it's less about a sudden shock and more about these persistent, evolving challenges that they're constantly adapting to.
I think that's right.
And what are analysts saying about these broader trends, specifically for FedEx? Are they confident in the company's ability to navigate these waters? Or are there still concerns about the competition or those macro factors?
Well, analyst commentary pretty consistently points to expectations for continued operational efficiency improvements and a gradual recovery in their margins.
Okay, so they expect the efficiency drive to keep working.
Yeah, it aligns perfectly with this idea that even with modest revenue growth, improving how they manage costs and optimize their operations can significantly impact the bottom line. It's really a story of internal control and strategic execution in what is a challenging but maybe improving external environment.
Right.
They're essentially betting that by doing more with less, they can sustain profitability.
Given all this, then, what are the potential best case and worst case scenarios for this upcoming report? What should you, our listener, really be paying attention to when those numbers drop on September 18th?
Okay, so for a bullish outcome, the best case, we'd ideally see a beat on both revenue and earnings.
The double beat.
The double beat. This would likely be driven by their improved cost discipline, really paying off their ongoing efforts to streamline operations bearing fruit. We'd also look for continued momentum in both their express and ground businesses, showing resilience against those competitive pressures we talked about.
Mm-hmm.
And finally, that stabilization we mentioned in global shipping demand actually translating into better than expected results, maybe boosting volumes more than anticipated. A real adjusting the sales success story, like you said.
Okay, that's the upside. What about the downside?
Right. On the flip side, a bearish scenario would probably involve a miss on volume expectations. Perhaps due to ongoing yield pressure in the shipping market, meaning they're just getting less revenue per package.
Right, lower prices.
Or we could see incremental cost inflation squeezing those all-important operating margins if, say, fuel prices spike unexpectedly, or labor costs rise more than planned. Any of those could lead to disappointment compared to the market's implied expectations.
Especially if the market's already priced in some good news.
Exactly, especially if the market has already factored in some of that gradual stabilization and is kind of expecting perfection.
So, what are the absolute must-watch metrics when this report comes out? If we're looking at just a few key indicators to confirm or contradict those scenarios, what should we zero in on?
Okay, the key metrics to really zero in on are, first, volume growth in both their express and ground segments.
Volume growth, got it.
This will tell us if global demand is truly stabilizing for them and if their market share is holding up against those e-commerce competitors. Also, keep a close eye on operating margin trends.
Margins, okay.
This will confirm if their efficiency improvements are actually paying off and if they can maintain profitability in this competitive environment. And finally, any updated guidance for fiscal year 2026.
The forward look. Crucial.
Absolutely crucial for understanding their outlook and how confident management really is about the coming year. This guidance will tell us if management sees the storm subsiding or if they're still expecting, choppy waters ahead.
Okay, so after weighing all this information, the analyst expectations, the historical performance, the macro trends, that strategic pivot towards efficiency, what's the overall sentiment for FedEx's upcoming report? And what might this mean for investors considering their next steps?
Our overall leaning, I'd say, is neutral to modestly bullish.
Neutral to modestly bullish. Okay.
Yeah, this is largely based on their recent history of meeting or beating expectations, plus that gradually stabilizing macroeconomic backdrop we discussed. It's not, a screaming buy signal that makes you want to mortgage your house.
Right.
But it's not a clear sell signal either. It feels like a company that's showing some resilience.
Makes sense.
If I were to, put a confidence score on it, maybe a 5 out of 10.
A 5 out of 10, right in the middle.
Pretty much. There's that wide range in estimates we noted, especially with the EPS figures. And while there's potential for modest upside driven by those internal cost controls, there's also meaningful risk tied to the overall revenue picture and those broader macro trends. So yeah, a balanced, somewhat cautious outlook, reflecting the inherent uncertainties in global logistics.
Okay. And what about trading strategies for folks looking to maybe engage with this news? Should they be thinking options, equities, or something else entirely?
Well, the elevated implied volatility in the options market suggests a couple of avenues, depending on your conviction level.
Explain implied volatility quickly.
Sure. It's basically the market's expectation of how much a stock's price will move after the earnings announcement. When it's high, options get more expensive.
Gotcha. So the market expects a move.
Exactly. So for those betting the stock won't move as much as the options market implies, they might consider strategies like selling a straddle or a strangle. These involve selling both call and put options to potentially profit if the price stays within a certain range.
Okay, betting on lower volatility than expected.
Right. Conversely, if you're expecting a significant surprise, either positive or negative, options can offer speculative opportunities for potentially large moves, but with defined risks.
Higher risk, higher reward potential.
Precisely. But for equity investors, maybe a more cautious approach might be best, especially given that 5 out of 10 confidence score.
Wait and see.
Yeah, it's often wise to wait for confirmation, especially by listening closely to the commentary on volume and margins during the actual earnings call. Let the dust settle a bit, see if their efficiency strategy is truly delivering before committing to any strong directional trades.
That's definitely prudent advice. That's a lot to consider, but it really gives you a solid framework for understanding FedEx's upcoming report. It just shows how many moving parts there are, doesn't it? Assessing a company's performance, from global economic shifts to internal operations, efficiency drives, and those unique competitive pressures, like from Amazon Logistics.
Absolutely. It's complex. And if we connect this back to the bigger picture, it raises an important question for you, the listener, to maybe ponder.
Oh, yeah.
In an era where global supply chains are constantly evolving, facing new challenges, geopolitical shifts, technological disruptions, even that Amazon effect, we mentioned how much of a company's success in logistics is truly within its own control versus just being a reflection of the broader economic tides.
Hmm.
It really makes you wonder how adaptable these huge titans can truly be in the long run.
That is a great thought to chew on as you watch those reports roll in.
Thanks.
Thank you for joining us for this insightful look into FedEx's upcoming earnings. We'll be back soon with another detailed analysis into the world of investing.